Welcome to Trading Lounge and the US Indices for Wednesday, August 24th, and starting with the S&P on the daily chart. I just want to go over a few things here before we go to the intraday. So as it stands at the moment, we've got this move up here with an A and a B and a C wave up here. We could also still call it wave 1 and 2 and 3 and coming back for wave 4, because this move here as 1, 2, 3, 4, 5 here, this wave 4 here, when a market pulls back, it pulls back to the wave 4 of 1 lesser degree, or the 38.2% retracement level. So down at the 4,100. So it's possible that this can be a wave 3 and wave 4 here, and then go up for a wave 5. So what we've been looking for is to help confirm that that's not the case by getting 5 waves down here. Now we don't have 5 waves yet. We could still look at this as an ABC correction down here, and this is loading up here, and it could snap back higher than we think. So that's one thing to keep in mind. Okay, now the other pathway that I'm looking for basically is an ABC pattern here with an A wave here, and then an A and a B and a C wave here, and then up for the C wave of B, and then down again from that point. So that's my primary count, and that's the one I'm most sort of satisfied with, but that doesn't mean that it's right. So the other point here is that when we take this high to this low here, we can see that we're in the 50-60% retracement level area here, where we should be for another move down at that point. So why can't we just put this A wave here and B wave here and C wave over here of this degree and call it done and dusted, and we can work to the downside at that point? Well, that's certainly on the cards as well. It's just that some stocks like Apple have moved up very high, and other stocks have turned up, worked themselves up into sort of this area, and then there's other stocks that haven't really worked themselves up much at all, and they're down here and it looks a little bit small. So there's a variety of things. So I'm still going to put this over here and go with this, and it doesn't hurt to have an alternative count, and you just need to know at what point that's validated or invalidated. But what we're going to do to solve all of these problems, if first of all if we get 5 waves down here, right, then we're going to short the B wave, as I probably mentioned yesterday and bored you to death with, because it could also be a wave 2 at that point. And if it is a wave 2, well then obviously it can come down, you know, we'll get that whole move coming down at that point there, and that B wave would be over there. So these are the things that are running through my mind, and yeah, and I think all of those are fine, and it just leaves us with a simple solution, isn't it? You're possibly short at the moment down here, and that's all good, and we'll count those waves down here in detail. But when it comes to it, it's this B wave and wave 2 here now that we look to short, because if we get 5 waves here, then we can have confidence to short it at the 61.8% retracement level or thereabouts. And yeah, and then it's basically, are we feeling lucky or not? Because we'll come down for the C wave, and then we can go up from that point. Or we come down for the 3rd wave and we keep going down. So that's something that we'll need to discuss and work through as we go. But if we're set up for it and we're in the market at the B wave, and hopefully it's wave 2, well then we can capture that larger move down. If not, and there's different ways we can look at determining which is which in this particular length here. It'll take a little bit of work, but we'll talk about that further. But on the bigger picture here, I just really wanted to put that out there as an A and a B and a C for the A wave, an A, B, C back for the B wave, up for the C wave. That's our primary count. We could look at this as an A, B, C pattern here and then continue all the way down. We can still look at this as wave 1 and 2 and 3, and coming back for wave 4 here, and then moving up into wave 5 here. So that's also possible as well, but we can eliminate that if we get 5 waves down. Okay, so that said, we'll just cut through to the intraday, and we'll start with 5k tick just to get a clear sort of picture on things. So this B wave would be over here, this C wave would be here. We're currently looking down for the A wave here, and then back for the B wave here, which can also be a wave 2 at that point. We can't rule that out, but we're going to be looking, if we get the 5 waves here, then we're going to be looking to be short here, and we'll trade down. We may get wave C or we may get wave 3, but we'll see what we get at that point. We can also look at this as being a wave 4. That's the wave 4 of 1 lesser degree here. So this is pullback. So we could look at this as an A and a B and a C wave down here. There's 2 different ways to count this little move down through here so far. If you have been short in this market anywhere, I've just moved the stop down to really tightened it up down at this point here. You could probably expect to bounce off the wave for the 100. I mean, I did say that here as well and made a mistake on that, but that's the way the cookie crumbles sometimes. Sometimes you get things right and sometimes you don't. So it all comes back to managing risk at the end of the day. So yeah, counting this down through here is the next step. So I've got this sort of, a lot of the stocks have got wave 3 here and 4 here and going down for wave 5 to finish off, right? But when I look at that in a bit more detail, so this is 5,000 ticks. So if I drop that down to 10 ticks, that whole move down into 10 ticks, this is what I come up with here. Let me just expand this out a little bit further. So we can look at copying that and put that there at 1, and then we've got 4,000. Normally, you know, when a market's heading towards a large number, most of the time it gets pulled to that number, you know, and we can use that, you know, it becomes a bit of a magnet. So, but we also know that 1 is the strongest number in the market, so it would need to get on the flip side of that. It would have to be the 100 would have to become the resistance at that point with a classic trading levels pattern. But this is the main number here. So this one counts a little bit differently. If I can just open this up a little bit, it's a bit tight. So that's the top there. We've got 1, 2, 3, 4, 5 here for that. And then I'm looking down at here as wave 1 here with an A, B, C for wave 2 here. And then a bit hard to see in here, but wave 1 here and 2 here, and then 1 and 2 here, and then all of this is the 3rd wave here, and the 4th and the 5th for the 3rd, the 4th. So it gives me the green wave 3 here and the green wave 4 here, and then we'd have to look down here for well, 1 and 2 and 3 and 4 and 5 to come into the 100 here. Maybe just bounce off that. This wave 4 can come back to this wave 4 and then move down lower at that point. So also with the, just looking at it a little bit differently, also on 10 ticks as well, but on the SPY, on the share price, it's not the share price index, I'm thinking of Australia, sorry, because our futures market, our ASX 200 is called the SPY, SPI. Here we can look at it, well, as an A and a B and a C wave down here, because we could kind of consider it being a wave 4 at this point as well. We need to take that on board. We haven't eliminated it yet, you know what I mean? It's not invalidated. So we've got 1 and 2 here, and 1 nice little ABC for 2 here. So that suits quite nicely with this here. We just got that extra little hump in here. So, and then we've moved, in this case, we've got that nice sweeping move down here as wave 1 and 2, and 1 and 2 and 3, 4, 5 for the 3rd wave, 4th wave, and the 5th wave here, and then as 3, and then 4 and 5 here. So I don't know if if we've got this here. So we could put, let me have a bit of a closer look at that. Yeah, no, I'll be happy putting that there. But this could just be the situation. If I put this wave 3 here, I still need wave 4 here, and this wave 4 is not really come in. So, you know, this move here can be all wave 1 here, wave 2 here with 1 and 2 and sort of heading lower here. So we basically need 3, 4 and 5 to come in here, and that might just be, you know, if this moves up here, then we've got the wave 4 at that point, right? And then it'll come down. So just mind your stop at that point. But otherwise, we would need to pull this down into this area through here and still look for that wave 3 and 4 here and 5 here. It's a bit out of sync with stocks, I have to say, but this can run in, you know, well, this just catches up to the futures market in the off hours anyway. So, so we could still have this as a wave C here at this point. So yeah, just see if this low gets breached here, then we'll still need to look at this as 1 and 2 here, and then building down for 3, 4, 5 for the third wave, and then the fourth over here, and then the fifth coming down here, which will bring us down to closer towards the 400 at that point. So that's the SPY. And let me put that back into its place over there, and this is just my working chart on 10 ticks, so I'll put that back over here. And so yeah, so this is where we're left with here. So what I'm trying to do is just work out the low here for this. Even though I got it wrong here and it didn't bounce here, because we were looking for a fourth wave, I wasn't expecting to have a deeper move down at that point, or was I? I can't remember. Probably had an alternative count, but either way, we, you know, got the third wave through that. So, but this time it should bounce around here, or at least lock onto the 100, because, you know, a trend has got a beginning and it's got the middle, and then it's got the end of the trend here. So at the end of the trend, it's going to be a bit like the beginning here, you know, so you could probably inverse this over to here. So yeah, it's you know, we never got the momentum coming through from yesterday, the day before, did we? You know, so we can see that it's obviously slowing down. So we're going to get ready for that bounce. You know, we know the daily stochastics is also, you know, stretching down. It will have another session to you know, to load up, so to speak. But yeah, look, the whole thing, as I mentioned, I'm not that really, if you're short, that's fantastic. If our next trade will really be at wave B or 2 up here, this is the one that we're looking for, based on getting 5 waves down here and not 3 waves down here. So we need to confirm that 5 waves across most indices, and also more importantly the stocks as well, you know, the apples of the world. So that's that. So going to the NASDAQ here, and just the triple Q for a nice clean count. Now we could count this a little bit differently as well, but as it stands, a conservative count of 1 and 2 here, and 1 and 2 and 1 and 2 in this case. And then I've got this down here, 3, 4, 5 for the third wave, fourth wave, and then all of this for the fifth wave for the third. So the third wave from here to here has really, you know, got the power in it. I could extend this further and put this wave 4 over here on this one as well, and count this down a little bit differently down here. I understand that. But everything being equal, we should move down a bit further, because this move that's moved up here, be it this wave 4 or be it a green wave 4, which I will just put to the side here so I know, is that the main point here is that you can see that this is in 3 waves here. So that means this low will get taken out here. So that's the so that's why you can put a stop above that at this point. And looking at the NASDAQ, it's a little bit more complicated, but the same count, 1 and 2 and 1 and 2 and 1 and 2, and then a little 1 and 2 in here, and 3, 4, 5 for the third wave, fourth wave, and then 5 waves down here as 1, 2, 3, 4, 5 for the third, fourth, fifth for the third, the fourth, and the fifth. So in this case, we've really just got 1, 2, 3, 4, 5 coming down here for that, you know. So keep using your trading stop coming down here, I reckon, or look to take profit in here. The market will probably, you know, need, when you're around big numbers, when it comes through like this, when it doesn't really stop at the level, that's an overshoot pattern, and we don't see them very often, but they're like this. They doesn't stop at the level, it comes through here. The distance it comes below the level is normally the distance that swings back up and then continues on like that. So not a very common pattern, but it's the third least pattern, but it will come back to it at this point. So that means that all of this here will be that follow through here, and it'll come back here. So the distance that goes below here may be the distance that goes back up here, just as a rough rule of thumb, you know. It gives you a bit of perspective at that point. So that's the NASDAQ, and this is the ETF for the Russell. We'll look at the Russell in a moment. But once again, you know, we've been looking at this as an A and a B and a C wave here for the A wave up here, and then we're looking for the B wave back here as an ABC pattern, and that's all good. But also the reason I'm showing you this chart for is because we can still look at this as 1 and 2 here, and gone up for wave 3 here and coming back for wave 4, because this is the 38.2% retracement level. So it hasn't really breached any rules, you know. It's just that the stock market is sort of giving us the ABC sort of treatment here, and so that's why I'm looking for 5 waves to come down here. I'll need to confirm that 5 waves here. Now the platform is just getting its 10 to 8 in Sydney, so the platform sort of resets at that time, so gets caught in this particular video. So yeah, so we can look at it as an A and a B and a C for the A wave, and then coming down here for the A wave, the B wave, and a C wave down here. So yeah, obviously if it comes down here, then we're kind of correct on that. And also too, just in here, we've got the B wave and wave 2. So that means we'll also be looking to short this wave 2, because we'll either come down to here, or we're going to be coming down much further. So this is going to be key. And also too, if it is wave 2, what normally happens is that sometimes they don't pull back to their 61.8%. So we need to be all over that little move up here as an ABC pattern in that regard. Okay, I just paused it while it was resetting. So this is the count that I've got here, just in case you're into this one. So we've got 1 and 2, and I've got this as 1 and 2 here because a couple of reasons. First of all, this high here is just a little bit lower than this one here, and this is how the rest of the market lines up. So 1, 2, 3, 4, and then 1, 2 here, 1, 2, 3, 4, 5 for the third, fourth, and fifth. So in this case, the blue one here, and this would be coming down. So we'd still need to make a new low here, unless that's going to be the low here. But we didn't really get a nice 5-way structure here on the triple Q going up there as we mentioned. So it's highly likely that we've got wave 4 here, and this would be wave 1 and 2 here, and 3, 4, 5 coming down into the 188 area. And then we'll go up for that B wave, but that will give us that 5 waves, because we really want to confirm that we've got 1, 2, 3, 4, and 5. You know, we need to get, you know, it has to be the sort of the main count across most markets, you know, that we can prove that's correct. Because if we're going to be shorting this, you know, after 5, 3, 5 structure right on the top, then we need to be sure that we have 5 waves here, you know. So that's what we're trying to do. I'm just going to move that back into my other section, and this is the Russell. So right, so as I mentioned, we can have wave 3 up here, but we can also have wave C of A here, and we will need to have 5 waves down. And in this case, I've got 1 and 2 and 1 and 2, even though it's a little bit tricky here because of the futures of market of, are trading out of hours. So yeah, we've got that 2 humps rather than the 1 hump. So but that's okay. It still works. So yeah, so wave 1, 2, 3, 4 and 5 here, that's the way I've got it. And then wave 4, and you can see that that's really in 3 waves here, so that's quite good like that, isn't it? Because it just sort of, we've got that 5 waves there. There may be a bit of overlap there, but when Elliott created his when he noticed the patterns, that was noticed on non-leveraged markets. And also too, that when you get into very small degrees of structure, I think a bit of overlap is fine, because it could be on lower volume and all of these sorts of things. But yeah, you just don't want to see overlap at at minor degree at least. So yeah, I mean, here it looks like we've got 1, 2, 3, 4, 5 for 1 and 2 and 3 and 4 and then down for 5. And yes, wave 4 overlaps wave 1 here. So that's an issue, but I mean, it does make a nice fit. And then we've got this A, B, C pattern here. I'm not sure about that 5 waves, but the A and the B look good, and the C's up there. Pull back to the main supply area here, and now it's making its way down in another little impulse wave here. So we'll see this come down for 1 and 2 here, and then there'll be down for 3 here. There'll definitely be some sort of bounce coming in around that 1900, which will create the low of 1, 2, 3, 4 here. This will get complicated and yada yada yada, and then down for wave 5. So we're looking at taking money off the table down here somewhere, if that's of any interest. If you want to bring your stop down for this one here, I mean, I just anywhere between 1890 and 1880 here. They were pretty rough years. Would be a nice place to vacate. So that's that. And the Dow. Okay, so the same thing again here applies, in that we can have it as an A and a B and a C wave for the A wave. If we get 5 waves here, then we can treat it as the wave A here, and then the wave B here, and then we'll go down for the wave C. At the same time, we could also consider the wave B here as wave 2 here, and we come down, continue to move down at that point. So that's possible. So we need to play that. We need to play that out, and we need to be, we need to be on it. If we come down for wave C, well then that's it. We go up, and if not, well then it's going to be a little bit tricky, but we'll get there. Just have to inch our way forward. And the other way is 1 and 2 and 3 and 4 in here, and then going up for wave 5 here. So it hasn't been ruled out yet. You know what I mean? It looks like it will do, but it's good to follow things right through to the end, because that way you don't get caught out too much. So let's just go and have a look at this. We're on the 5K tick chart from this daily chart. So this one I've got a little bit extra leg in here, so yeah, probably got this wrong somewhere, but wave A here as saying, so 1 and 2 and 1 and 2 here, and then I've got this as 1 and 2, and I have put a bit of work into this. I have pulled it apart, 1 and 2, and all the way down for 3, 4, 5 for the third, 4th, 5th for the third, the 4th, and this one here is 1, 2, 3, 4 and 5, so we should make one more little low and then get that rally and then down again. But this is a little bit different, because the other counts have got this, most of them have got this wave 4 in here. So there's a couple of things going on across the board. So we're not going to have a perfect finish on all of them, that's pretty much the go here, you know. But like I said, it doesn't really matter, because all we're interested in is getting a consensus of 5 waves to the downside, so we can short this wave B or wave 2 here. You know, that's pretty much where we're at. So we're a long way off that. But we could have a little bit of fun maybe looking at, we may not get, and if you can capture just the 3rd wave in the A wave, that would be great, just the 3rd wave. Otherwise we can catch the wave C here, and hopefully that comes on a bit more of an angle. That's going to be helpful. And when this comes up here, we'll be counting 5 waves up here, 1, 2, 3, 4 and 5, and then we can just basically look to short here and, you know, look to build positions to the downside here. There'll also be 5 waves in this little move here, so if you can count the 5 waves in that, and then if you take it into a small tick chart, there'll be the 5th wave in here. You'll be able to nail it down into that point there as well. So that will be a good exercise. And, you know, the thing is, sometimes you get a bit sort of scared of doing things. Is that right? And is it the right time? That's when trading less money, you know, even if it's one contract, you know, just so you can practice, and because you need to be able to breathe correctly, you know, to do it. You have to learn to basically, it's not playing for the money, it's playing the game. So if you can play the game without panicking, then you're on your way. Alrighty, I'll leave it at that. Cheers.